For anyone running a service-based business, freelancer, or small enterprise, managing your finances effectively is paramount. This often involves communicating costs to clients and, eventually, requesting payment. Two terms you'll constantly encounter in this process, especially when using accounting software like FreshBooks, are estimate and invoice. While both deal with money and clients, they serve fundamentally different purposes in your financial workflow. As an accounting software expert, I frequently see confusion between these two documents. Understanding their distinct roles in FreshBooks and in general business practice is crucial for accurate record-keeping, clear client communication, and ultimately getting paid on time. Let's break down the core differences between an estimate and an invoice in FreshBooks. The estimate, your project proposal and cost projection. Think of an estimate in FreshBooks as your initial proposal or a professional quote for potential work. It's a document you send to a prospective client before you start a project or provide a service. Its primary purpose is to provide an educated guess or a projection of the anticipated costs for the work you intend to do. Key characteristics and uses of an estimate in FreshBooks. Pre-work document. An estimate is always sent before any services are rendered or products are delivered. It's part of the pre-sales or pre-project phase. Cost projection. It details the expected costs for services, labor, materials, or products. You'll list out the items, their quantities, rates, and the total estimated amount. Negotiation tool. Estimates are often used as a starting point for negotiation. Clients might review it and ask for adjustments, clarification, or even different scopes of work. No legal obligation. Initially, an estimate is generally not a legally binding document on its own. It's an offer. While it sets expectations, work typically doesn't commence until the client approves it. Client approval process. FreshBooks allows clients to view estimates online, leave comments, and formally accept or approve them. This approval is a critical step as it signals the client's agreement to the proposed work and costs. Conversion to invoice. This is a major efficiency feature in FreshBooks. Once an estimate is approved by the client, you can often convert it directly into an invoice with just a few clicks. This saves you significant time and reduces data entry errors, as all the line items and client details are carried over. Tracking potential work. Estimates help you track your sales pipeline and potential revenue. You can see how many estimates you've sent, how many are pending, and how many have been approved, giving you insight into your future workload. Professionalism. Sending a clear, detailed estimate through FreshBooks demonstrates professionalism and transparency to your clients, setting clear expectations from the outset. Example scenario for an estimate. Imagine you're a freelance graphic designer. A client approaches you for a new logo design. Before you start sketching, you'd create an estimate in FreshBooks outlining the service, logo design package, e.g., 3 concepts, 2 rounds of revisions, final files, your hourly rate or a flat project fee, any estimated costs for stock photos or special fonts, the estimated total. You send this through FreshBooks. The client reviews it, asks for a slight adjustment, you revise it, and they then approve it. Only after their approval do you begin the actual logo design work. The invoice, your official request for payment. Now let's turn our attention to the invoice. In FreshBooks, an invoice is the official request for payment for services or products that have already been delivered or completed. It's a formal bill that details exactly what the client owes you. Key characteristics and uses of an invoice in FreshBooks. Post-work document. An invoice is always sent after the work has been performed, the service has been rendered, or the product has been shipped. Legal request for payment. Unlike an estimate, an invoice is a legally binding request for payment. It typically includes terms of payment, due dates, and your payment instructions. Actual costs. An invoice reflects the actual, agreed-upon costs for the work done. If the project scope changed from the original estimate, the invoice should reflect these changes accurately. Detailed breakdown. Like an estimate, an invoice provides a detailed breakdown of services or products, quantities, rates, and the total amount due. It should match the completed work. Payment facilitation. FreshBooks invoices are designed to facilitate payment. They often include direct links for clients to pay online using various methods, credit card, bank transfer, etc., depending on your FreshBooks setup and connected payment gateways. Financial tracking and reporting. Invoices are critical for your accounting. FreshBooks uses invoice data to track your income, generate financial reports like profit and loss statements, and manage your accounts receivable, money owed to you. Record keeping. Both estimates and invoices serve as important records for your business and for tax purposes. FreshBooks keeps a clear trail of all these documents. Reminders and automation. FreshBooks allows you to set up automatic payment reminders for overdue invoices, helping you reduce the time spent chasing payments.